Hello everyone, welcome to today's session on goods and service tax filings. Today our topic is debit notes, credit notes and bill of supply. So before moving ahead with today's topic, let us quickly recap what we did in our previous session. So in our previous session, we studied about the GST compliant invoices, why they are important, what are the different types of GST invoices like tax invoice, bill of supply, debit notes and credit notes, receipt voucher, payment voucher, refund voucher, etc. Then we learned about the mandatory fields in the GST invoice like invoice number and invoice date, supplier and recipient details, HSN and SAC codes, description of goods or services, then GST rates, taxable values, and so on. Then we learned about the invoicing rules. What are the invoicing rules? Like it must be reset to start with a fresh series at the beginning of each financial year. Similarly, an invoice can have a maximum of 16 characters. Then we learned about the time of issue of invoices both in case of goods and in case of services. At last, we learned about the e-invoicing and the applicability of e-invoicing. So let us proceed with today's topic that we are going to cover, the debit note, credit note and the bill of supply. We are going to learn about the definition of these documents. We will understand about the bill of supply, the concept of bill of supply. So let's move ahead with today's topic, that is debit notes, credit notes and bill of supply. Under this topic, we are going to see the definitions of these documents. Then we will understand the concept of bill of supply. We will learn the formats and the time of issue of these documents and what are the common mistakes that we need to avoid while issuing such documents. So why are these documents important? These documents may seem like back office paperwork, but getting them right is key to GST compliances, accurate tax reporting and avoiding penalties. So these documents are used when there is a change or amendments in the original invoices. They help in adjusting the tax liabilities and amending the taxable values. Let us understand this with an example. Suppose in the month of April, a tax invoice was raised for rupees 1 lakh and contained a IGST of rupees 18,000, that is at the rate of 18%, 18,000 IGST. Now after the filing of GST returns, that is GSTR 1 and GSTR 3B, it was identified that the value of goods or services was rupees 90,000 instead of 1 lakh, and hence the corresponding GST amount also reduced to 16,200. So in the next month's return, the credit note of the differential amount will be included in the GSTR 1 return. This will lead to a reduction in tax liability of the seller. Along with this, it will reduce the taxable value of the goods or services. So any increase or decrease in taxable values or tax liabilities must be adjusted through a debit note or a credit note rather than amending the original invoice. This leads to correct reporting in GSTR 1 return. Also, the input tax credit of the buyer depends on the GST returns filed by the seller. So, accurate reporting is essential. Hence, issuing of these documents is equally essential from the buyer's perspective also. So let us take an example. Gada Electronics sold a mobile phone to Mrs. Babita for rupees 50,000, on which he paid GST of rupees 9,000. But later on, he came to know that the price of the phone was rupees 60,000. So Gada Electronics corrected the error in the invoice and will pay tax on the remaining 10,000, that is 1800. So this transaction will be effected using a debit note. Moving ahead. What is a credit note? A registered supplier of goods or services or both is mandatorily required to issue a tax invoice. However, during the course of trade and after the issue of invoice, situations may arise like the taxable value or the taxes charged in the invoice is found to be in excess of the taxable value or tax payable in respect of such supply, where declared value is more than the actual value or where the rate of GST charged is higher than the applicable rate on the goods or services. Another situation may arise where the goods supplied are returned by the recipient or where the goods supplied or services rendered are found to be deficient. That is, either quantity is less than the declared quantity in the invoice or the quality of services are not satisfactory or are as per the required specification, or due to any other such situation due to which the taxable value or the tax needs to be revised and reduced, then a credit note has to be issued. So the supplier will issue a credit note to the recipient and ultimately his tax liability will reduce. So looking at the slide, the cases when credit note shall be issued: supplier declare value more than the actual value of supply, or supplier declares higher rate of tax than applicable rate of taxes, then the quantity received is lower than the quantity mentioned in the invoice, or the quantity of the supplied goods or services is not satisfactory and hence partial or total reimbursement of invoice value has to be made to the recipient. So, a registered person who issues a credit note in relation to a supply of goods or services must issue and declare such credit notes in the returns of the succeeding months, but not later than the 30th November of the next financial year or the date of filing of annual return, whichever is earlier. So, the timeline for issue of credit note is the month in which such credit note has been issued or in the succeeding months, subject to a maximum of 30th November of the next financial year or the date of annual filing, whichever is earlier. There is no prescribed format for credit notes, but it must contain informations like name, address and GSTIN of supplier, then name, address and GSTIN of receiver, then the credit note number which shall not exceed 16 characters, then date of issue, then taxable value and the GST component on the taxable value, and so on. So let us take an example. Gada Electronics sold a mobile phone to Mrs. Babita for rupees 50,000, on which he paid GST rupees 9,000. But later on he came to know that the price of that phone was rupees 40,000 only. So Gada Electronics corrected the error in the invoice and will pay remaining tax on rupees 10,000, that is 1800. So invoice issued was 50,000, actual value was 40,000. So a credit note of rupees 10,000 will be issued along with GST. What is a debit note? Like credit notes, where a tax invoice has been issued for supply of any goods or services or both, and the taxable value or tax charged in that invoice is found to be less than the taxable value or tax payable in respect of such supplies, then in such cases debit note has to be issued by the supplier of the goods or services. Also, where the goods supplied are found to be in excess of the quantity, then also a debit note shall be issued by the supplier. Other than this, where the supplier charges a penalty for delayed payment or for any other reason like for a demurrage charge or anything, then also a debit note has to be issued by the supplier. So looking at the slide, cases where debit note gets issued: supplier declares less than the actual value of supply, supplier declares lower tax rate than applicable, quantity received is higher than the quantity mentioned in the invoice. So the debit note issued by the supplier will ultimately increase his tax liability. It has to be declared in the return for the month in which it has been issued. Format of debit note. Again, there is no prescribed format of debit note, but debit note must contain details like debit note number and debit note date, then supplier and recipient information like supplier and recipient's address, name and GST number, then the differential value and the differential value in tax, then the signature of the supplier. An important point to note here is that if a debit note has been issued against taxes not paid or confiscation of goods or seizure of goods, then the buyer will not be able to avail the input tax credit in such scenarios. Example of debit note: Gada Electronics sold a mobile phone to Ms. Babita for rupees 50,000 on which he paid GST of rupees 9,000. But later on he came to know that the price of that phone was rupees 60,000. So Gada Electronic corrected the error in the invoice and will pay on the remaining 10,000 GST amount of rupees 1800. So the original invoice was 50,000. Later on it was discovered that the correct value was 60,000. So a debit note of differential amount of rupees 10,000 plus GST will be issued. Bill of supply. What is bill of supply? A business registered under GST issues a tax invoice to the buyer. Such invoice mentions the GST rates charged on the goods or services sold. However, some businesses registered under GST cannot charge any tax on the invoices issued by them. Such dealers have to issue a bill of supply. So, a bill of supply is issued when GST is not applicable on a transaction or when GST is not recoverable from the customers. So, who can issue a bill of supply? A composition dealer, that is a taxpayer whose turnover is less than 1.5 crores and who has opted for composition scheme, is required to pay tax on a fixed percentage, that is 1%, 5% or 6% as the case may be. So he cannot charge anything on the invoice and hence in this case he will issue a bill of supply. Similarly, exporters. Exporter is also not required to charge GST in the invoice. This is because export supplies are zero rated. Hence, they also have to raise a bill of supply. Then supplier of goods of exempted materials. A registered dealer is engaged in the supply of exempted products, say primary agriculture produce. Then in that case also, he is not required to raise a tax invoice, rather he will raise a bill of supply. So format of bill of supply. The bill of supply should have name, address and GSTIN of the supplier. It must not exceed 16 digits, that is the maximum allowed characters is 16 including any special characters. Then the date of issue. If the recipient is a registered taxpayer, then the name, address and GSTIN of the recipient. HSN code in case of goods or service accounting code in case of services. Then description of goods. Then value of goods or services without any tax component after adjusting any discounts or abatements. Last is signature or digital signature of the supplier of the goods or services. So what are the common mistakes? Non-reporting in GSTR 1. Many a times a taxpayer does not report the series of bill of supplies issued during the reporting period. Also, many a times a taxpayer does not differentiate between the tax invoice and the bill of supply. That is, the heading of the invoice remains bill of supply and the taxpayer used to charge GST in the invoices. This is not a correct practice. Then delay in issuing of credit notes. Common mistakes while raising debit notes, credit notes or bill of supplies. Not reporting in GSTR 1. Many times the supplier of taxable goods or services does not report debit notes or credit notes in the GSTR 1 return. This leads to incorrect disclosure of taxable values and taxes thereon. Wrong use of invoice versus bill of supply. Many times it happens that the taxpayer inadvertently use the word bill of supply at the top of the invoice and charges GST in such bill of supplies. This is not a correct practice. Then delay in issuing of credit notes. Sometimes the credit notes are not issued within the due dates, that is before 30th November or before the due date of filing of annual return, which results in non-adjustment of taxes and taxable values. Then the best practices: use software for tracking, use a third-party software for tracking the debit notes and credit notes. Then train the accounting team. The accounting team must be aware of the significance of debit notes, credit notes, and the bill of supply in terms of goods and service tax. Then reconcile with GSTR1. The debit notes and the credit notes must be reconciled with the GSTR1 return on a monthly basis. Then follow timelines. The timelines have been duly specified in the GST rules, which must be adhered to. Finally, maintain transparency. All the documents that are being issued must be disclosed in the GST returns to maintain transparency. So to conclude, credit note reduces the value of taxable supplies or tax amount. Debit note increases the value of taxable supplies or tax amount, and bill of supply, no tax is charged. So stay compliant and stay updated. Thank you.